Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I'm joined again by James Gerrish. Welcome, James.
Thanks, Nick.
James, I want to kick things off and talk about, I guess first of all, Trump was inaugurated early on Saturday morning our time. Since he's already come in, he's already made a few policy moves. Now, I guess with the market, it's been bobbing around slightly, presented a few opportunities. What are we seeing here, and what are we expecting over the next few weeks?
Yeah, the ASX 200 it capped out around 5,800 or 5,820 a couple of weeks ago. We've now pulled back around 4%. We had a low yesterday around 5,600. So that's a reasonable pullback on our market. We're down about 4% from the highs, and from our point of view, we're carrying reasonably high cash levels going into that correction. So we're now looking or using this short-term decline in the market to go and add a few positions to the portfolio. We did a couple today in ANZ and Altium, but there's some opportunities elsewhere in the market, so no doubt we'll talk about that today.
Yeah, definitely. I wanted to talk about ANZ first of all. Now, we've taken a relatively active approach on the banks over the last few years, and it served us well. Selling CBA at 95 a year or so ago. Now, ANZ, as we were saying in the reports this morning, is off about 8% from its recent highs. Now, that buy, are we thinking it's base short term, or are we just starting to build another position in the stock?
Yeah, starting to build another position in the stock. I think the first level is you've got to have a view on the overall market. So we had 5,600 or 5,590 to be more precise as the key level of support in the market. We have come back and based out at that level, and we've had we've got a bit of a rise in the market today, which obviously doesn't create the trend, but it's encouraging nonetheless. A lot of the weakness has been playing out in the banking space. So as you may mention, ANZ dropped 8% from its highs, which is a reasonable correction for ANZ. So we look at our overall portfolio positioning at the moment, or before today, we were sitting there in after 40% in cash. We're very underweight the banking space. We'd sold a number of our banks into strength. The only position we had was 5% in CBA and a position in Suncorp. But we're underweight that sector. We use weakness to upweight in it. And again, if these optimism returns to the banking space, we'll then be looking to jump on the sell side again. But our mantra is you've got to be a little bit more active around your allocations in 2017. It's going to be a volatile period in the market, we think, Nick.
Mm-hmm. And another one that we've bought this morning is Altium, around about that sort of $8 mark or below, only a 4% holding. Now, talk around the liquidity of the stock, not as liquid as some of the other ones that we tend to play, and also something a little bit different, we probably have to say, historically, given some of the recommendations of Market Matters. What's the thoughts behind that one? What are we anticipating over the coming months? Obviously a growth stock, not buying that one for you.
Yeah, it is. It's totally growth stock. It's obviously exposed in the technology space. They do software that underpins the manufacture of circuit boards and the like. So, a company that I've looked at for quite some time and been involved with it on and off over the past few years. It's come back from sort of above $10, now traded below $8 as of this morning. We picked some stock up below $8. Liquidity again is okay in the stock, but it's probably not the most. It's not a stock that we would typically go into, but opportunities that present themselves, we're going to look at it and take advantage of it if we can, Nick. So 4% in the portfolio, we'd be reluctant to go any more than that, just given that liquidity and given that it is, it's. You look at the PE of the stock and it's expensive, but it's not around that. It's around what they're going to do from the top line perspective. So revenue in FY17 will be likely to be around 100 million. Companies guiding to about 200 million by 2020. So it's a high growth stock, a good product, and it's come back around 20% from its high. So we jumped on it.
Okay, fantastic. And one last thing I just wanted to get the view on before we finish up is the gold space. Now, Newcrest is starting to kick a bit. We got that one a little bit lower than where it is now. Having a good day again today. Gold started to move. Now, would you be buying more than just Newcrest here if it just wasn't about our portfolio at the moment? Is there anything else on your radar in the gold space, and what are we thinking with gold moving forward here?
It's a macro play at the moment. So we've spoken before around our views of the US dollar and the impact that has on the gold price, and obviously the gold stocks as a result. So our view, the US dollar has rallied a long way on the back of expectations around US interest rates. It's a crowded trade. In our view, the US dollar is going to decline. That started to play out, and that's going to put some support under the gold price and under our gold producers. It's also putting support under the broader commodity complex. So, before coming down here today, the banks are reasonably weak on the session today. Commodities are really supporting the move higher. So we think that theme will continue in the near term. Not all commodities will do well. I think gold is probably the one that you play at this juncture. That's your purest way of playing the decline in the US dollar. So we've got Newcrest, we like Regis, we like Evolution, but again, if you're playing a macro view, then you go out there and pick the most liquid play, in whatever market you're trading, and this being the ASX. Newcrest is that big liquid macro play that we've got, and I wouldn't be surprised if we upweighted Newcrest some further in the portfolio.
And do you have a price target, or not really? It's just sort of coming as it goes.
Yeah, you've got we've got levels in mind, but again, it's dictated by what happens in the US dollar. So 1450 we wrote in our outlook piece for gold as a peak this year. That's a fairly bullish assumption, but that could well and truly play out if the US, that crowded US dollar trade starts to unwind, and if that's the case, Newcrest will be in the high 20s rather than the low 20s like it is now.
And we did see a $200 move, or even more than a $200 move in the gold price from the height of the low last year, didn't we? So thinking for a similar move isn't a big thing.
Yeah, they're really volatile. So gold stocks, the gold price, currencies are going to be in for a very volatile year. We wrote that in our outlook piece this week. So volatility, we're probably talking about it too much, but volatility is likely to be high this year, and you've got to be a little bit nimble in what you're doing from an asset allocation perspective and how you trade the market in 2017.
Fantastic. Thanks for the update, James. Thanks everyone for watching. As always, any questions, give us a call, 1300 301 868. That was 1300 301 868. Or you can always email us at info@marketmatters, and we'll either answer it in the report or get back to you directly. Have a great day.